Hi guys, today I am going to review Polyplex Corporation Ltd. From the image itself, you come to understand what Polyplex Corporation manufactures. So, Polyplex Corporation mainly manufactures plastic film which are used in packaging, and there are also other applications where these kind of plastic films are used. We will get to know in detail about that. So, as far as management is concerned, it was founded by Sanjeev Saraf, who was the founder and the chairman, and the Pranay Kothari, who is the CEO of the company right now. And let's see the Polyplex in detail. So, Polyplex, it started as a single line facility of PET films in Katima, Uttarakhand. And right now it is the largest, one of the largest PET film manufacturer. PET is basically polyester film manufacturer. So right now it is headquartered at Noida. The company is a $500 million multinational with six manufacturing and distribution facilities across India, Southeast Asia, Europe, and America. So the company is also one of the most profitable PET film manufacturer because of their cost efficient operations, and it is the fifth largest capacity of PET films. So currently, with headquartered at Noida, company actually has four major manufacturing locations in order to cater to the specific market. If you see Basapur and Katima was their first plant, both in Uttarakhand. Both these plants actually cater to Indian market. They manufacture around 55,000 tons per annum PET films and BOP films of 35,000 MTPA. And Rayong, Thailand and Indonesia. Indonesia is a new plant. So Rayong, Thailand, their Thailand subsidiary. These subsidiaries serve to the Southeast Asian market. So they make around 48,000 TPA PT films, polypropylene films of 18,845 TPA. Then there is European Free Zone Korlu, Turkey, which is the plant actually serves European and Mediterranean plants, Mediterranean market. So they make around 58,000 tons of PET films. And Decatur, Alabama, USA, which was their actually previous distributor in USA. Later they acquired it and they made it as a US subsidiary. So it serves the North American market. It owns wholly owned distribution company in Turkey and Netherlands, and it also runs recycling plant in Thailand to recycle the process waste. So let's see the product portfolio. So as a product as for Polyplex Corporation, there are four kinds of products. So Sarafil, Saracoat, Saralam, and Saraprint. So the first category of products is Sarafil base films. Sarafil base films are normally it is films, and if you know, this is the bread and butter for Polyplex Corporation, and majority of the sales, around more than 61% of the sales comes from this kind of products, which they are manufacturing the base films, and most of these films are used for flexible packaging purposes. So this is a key product, and it is a clear, transparent, flexible, and high tensile strength film. It is manufactured from polyester resin and polypropylene resin. The advantage is that the company produces both polyester resin and polypropylene resin as well. So it actually gives an integration benefit for the company. So in this one, there are around 6 7 types of films. First one is BOPET polyester films, biaxially oriented polyester films, which are thin, flexible package. This is used for flexible packaging, thin display, and the thin films are mostly used for packaging, and the thick films are mostly used for displays, PV, and industrial application. Because of its thickness, it has a different utility rather than the packaging. And BOPP films, which is biaxially oriented polypropylene films. This is a bit stiff, so it is also mainly used for packaging, especially food packaging. Then there is CPP films, which are transparent cast polypropylene films. Uh, the specialty about this film is this is softer. It has much better high performance and good appearance, used for food and garment bags. Then there is blonde PP and PE films, polypropylene and polyester films. So both are made by blowing the films, and it has a wide range of applications. Then there is sustainable films. It actually made through the innovation of Polyplex Corporation. These are eco-friendly or biodegradable PET films. Then there is holographic films. These films are more aesthetic. It has decorative purposes, and it is used for uh, gift wrapping and many used for many aesthetic purposes. From the name itself, you can understand that it is used as a holographic films. Then there is transfer metallized paper. It's a wide range of actually innovation from Polyplex Corporation. So this has application like security, making, security tag, publishing, and advertising. So this is all about Sarafil base film. Then there is Saracoat. These are silicon coated PET or polyester or polypropylene films. It is designed to provide excellent carrier for pressure sensitive purposes. That means that mainly it is used to make adhesives like labels, tapes, roofing shingles, peel and stick underlayments. So this is also manufactured from polyester resin and polypropylene resin. Then there is Saralam. These are extrusion coated film products with adhesive resins like LDPE or EVA, which has which has end use in thermal lamination products like book cover, identity card, cartoon lamination. So the metallized BOPET lamination used in roof insulation in construction industry, and cartoon lamination it is used in offset printing industry. So then BOPP thermal insulation films, these used in text as text covers, brochures, leaflets, you can see from here. Then there is Saraprint. This is also innovation from Polyplex Corporation. They innovated non-tearable polyester film, which is designed for digital print media segment. Like they can print as photo album, promotional or customized digital printing, mini offset printing. So a lot of application. You can see from the figure what the product is all about. So let's see the revenue segment. So in revenue, they have around 27% of the revenue coming from Europe, and which is the highest, and 26% of the revenue coming from the America. and 21% from India, 20% from rest of other Asia, which is Southeast Asia basically, and Polyplex USA contributes around 26% of revenue, and Polyplex India contributes around 26% of the revenue. Even though in Indian market their market capitalization is less, but still they contribute around 26%. That means that the market, Indian market, is so huge for Polyplex. Then there is Polyplex Thailand contributes around 23%, which is one of their main subsidiary. And Polyplex Euro Turkey contributes around 19%. And in the segment ways, 61% it is contributed by thin PET or polyester films. So that means that bulk of the revenue comes from the thin PET film sales, and much of the utility is for packaging industry, and 29% it is used for industrial use or something like digital printing and other value added products. Then let's see the innovations that happening in Polyplex. They have commercialized environmental friendly alternatives like Sarafil, PCR, polyester films, which are 90% recyclable content. From used PET bottle flakes and other PCR flakes. Then they also developed biodegradable films, PET, blonde PP, CPP, which meet the anaerobic biodegradation of the for the which suits the environment basically. So it can be degraded and suits the environment. Then the company also came up with a monolayer structure for some packaging application. The good thing about monolayer structure is that it has lesser plastic content. So the company is actually reducing the plastic content. Like it is said, reduce, reuse, and recycle. They are reducing the content in terms of monolayer structures. Then they also commercialized various value-added products, which I have already discussed in terms of holography, metal transfer, metallized paper, offset printing application, and so on. And another thing about Polyplex Corporation is that this is one of the low-cost producer of PET and PP films. So how they are able to produce goods at such a cheaper level is they have vertical integration, and they have upstream PET resin plant, which would be the raw material for making PET or polypropylene film lines. Then they have downstream uh, through metallizer and other value added products which they make from PET and PP films. So in both ways they are integrated. This actually helped the company to reduce cost and also generate much profits. Let's see some interesting facts about Polyplex Corporation. Polyplex Corporation, they are the industry leader with 100% capacity utilization. Globally, they're one of the low-cost manufacturer driven by scale of economy, operational excellence, vertical integration, and strategic manufacturing location. They have, if you talk about how much market capitalization they can make out from the each market, they control stable market share of 25% in Thailand and Turkey, around 10% in India, US, and Indonesia. So it's only 10 percentage, guys. So there is a huge opportunity that they will be able to grab more market share going forward. The company also commissioned greenfield PET film along with resin and metallizer use unit very quickly in a quick ramp up in 2019. The BOPP plant is right now it is under implementation. Company predominantly operated in thin PET films, which is the 3 by 4th production of global PET films demand, and which is mostly used in flexible packaging. And because there is more capacity addition from developing markets, company also started focusing on niche applications like solar panel, high-end applications in packaging and value-added products, so that in order to protect the margins and going forward and adapting to the business environment. They have warehouses in Netherlands, Poland, Spain, Germany, Mexico, Italy, and liaison offices in Singapore, Korea, and Japan. The company also made a share buyback in 2019, 9.9% of company's paid up capital. There is no share pledge. So the if you take the shareholding pattern, the promoters actually holds around 50.97 percentage, which was slightly up, slightly 1% up from the level they hold on 2018. That means that promoters increase their stake slightly, which is good for the company. And Mahalakshmi Trading and Investment Company Limited holds around 24%. So I feels that there is no information about Mahalakshmi Trading and Investment Company. I feels that that was the founders' family enterprise. So that holds around 23.83, and Secure Investment Limited holds around 17.31. Sanjeev Sarida Consulting Private Limited holds around 4.35. Others are meager. So, and if you see, foreign institutional investors actually increase their stake from 2018 at 1.85 to 7.71 percentage. Domestic institutional investors also increased their shareholding from 4.79 to 5.89. They decreased from slightly from last quarter because share price has been appreciating a lot, and public shareholding also came down because the share price has been advancing. So it's all about the business evaluation. Right now, I'm going forward with the financial evaluation. So in a single snapshot, it's a small cap company which has a market capitalization of 4,684 crores. The current price of the share is at rupees 1,492 rupees with a book value of 973 rupees. That means that book value is 1.53 percentage, not double. Actually, it's still not that expensive, and it went as high as 1,565 and came as low as 561 rupees. And if you look at the P value, 9.15, when you compare with the industry P of 17.9, that means that based upon P value it is undervalued, and price to book value is also undervalued. It's not undervalued, actually. It's actually right now it is bit expensive, but still it is not it's not that at a right right price to book value, which was Polyplex Corporation had before 1 year, and very good ROC at 26.8 percentage, ROE at 16.8 percentage, which is also good, and face value at 10, which means that in future the shareholders can expect stock splits, and there will be a benefit coming from that. And sales in last year, the ongoing year, they had a sales of 4,918 with a operating margin of 24.7%, which is so high. And they have a PAT of 512 crores. Last quarter, they made a sales of 1,294 crores with a PAT of 125 crores. In 3 years, they made a sales growth of 11.2%, which is okay, and profit growth of 47.6%, which is, that's why the investors are so interested in this stock, because currently the company is growing in a huge momentum. It also produced so much EPS recently, 163 rupees, and it has a debt of 595 crores, even much more than that when you calculate other. And the company also generated free cash flow of 956 crores in 10 years. That means that company is able to generate free cash flows for 10 years. That means that company is doing very well in last 10 years. And return on assets is around 14.4%, which is also fair. So let's see the revenue and profit growth. In revenue and profit growth, see guys, on from the revenue has almost grown 4 times. So from 1,218 to 4,918. And look at the profits. Profits also actually have grown 9 times. That means that company is so effective in generating profits while growing the revenues as well. So company is so positive in long term. Let's see the profit and loss statement. See the operating profit. Yeah, let's see the operating margin. 18%, 36%. From there, operating margin slightly coming down, then it's slowly improving from 2016 onwards. 13%, 14%, 16%. Right now stands around 25%. So currently it's at 25%. Do you know what is the reason behind one of the uh, jump in operational profit? The company is actually improving, capturing more markets, and developing new products. That's all okay. Another thing is that due to COVID, there is a huge demand for flexible packaging as well. So this also contributed for increase in volume sales. Then other income, it's actually coming down, which is good. Interest cost, see the interest cost. Over years, it was 54 crores, 56 crores. From there, the interest costs are coming down. That means that company has actually reduced the cost. Then net profit, uh, it had a higher profit in 2011. That might be something exceptional profit or something. So over the years, they have increased there. And see the dividend they pay out. They pay a lot of dividend. See, 101% dividend they give in 2000, right now, the 12 trailing months. which is so any investors who look for dividends, they can ideally invest in it. And look at the EPS also, a lot of EPS growth over the years. Then let's look at the sales growth, CAGR sales growth. So uh, within this 12 months, they had sales growth of only 10%. So the sales growth are not huge, but look at the profit growth, guys. In trailing 12 months, it had a profit growth of 104%. 5 years, 78%. 3 years, 48%. That all means that company is so efficient in generating profits. See the EBITDA values as well. It had more EBITDA values in 2011 when they had huge profits. Right now, also, it is actually reaching towards that 2011 mark, near to 25, but still very lower than 2011 marks. In previous companies, when I analyze, I never used to look around cash flow assessment and inventory turnover and debtor days. So later I realized that I need to focus on this aspect as well, because these are the factors which actually gives what's going underlying in an industry. And this might give you other insights about the company that gonna happen in future. So let's see some cash flow statements. Cash flow statements. See the cash flow from operating activities. Over the years, it has been going up. And investment part, they have been investing, but over the years, the investment has been, yeah, 2013 they invested so much, and to right now they are investing 265 crores and so on. So basically, we always have to look for operating activity and investing activity, basically, because mostly operating activity cash flows are very much important. So in operating activities, the cash flows has been going up, and the net cash flow is also positive. So the company generates a lot of free, I think a lot of free cash flows as well. I'm not calculating free cash flows right now on the slides. And look at the debtor days actually has been constant, so it means that 53, 47, 56, that means that the company is maintaining its position of collecting debt from the debtors. And inventory turnover ratios, like it had a better inventory turnover ratio in 2014. So in those days, the inventory days would be also less. The less inventory days means the company is actually recycling their sales faster. So in 2020, 2021, they had a lesser inventory turnover ratio. uh, that that is actually I think that the company has more capacity addition. That might be the reason. uh, there is no other ways, like due to COVID there have been more demand for a flexible package. So the that might be the reason. And look at the ROCE, ROA, ROE, and ROC. Uh, ROCE, like I previously discussed in about the company. In 2011, it had a high profit growth, high EBITDA growth, everything. From there, it came suddenly to in 2012, it came drastically down. So look at the ROCE from 30, it came up to 11.31. Then onwards, it gone further down. Slowly, it started improving. It improved a lot in 2019, around 16.8. But in 2020, it came down slightly. So ROE also shows the same pattern, because it is uh, return on equity, which is shareholders' money. Then ROA previously they had like in 2011, like all the other values, they also have good ROA value. But over years, it came down near to 2. It even went negative. From there, it recovered slowly to 4.89. And right now, it stands around 14 percentage, which is very high. So I did not show on those in 2021. So I actually feels that the ROC, ROE and ROA has improved in 2021 in a huge margin. That's why even the share value also appreciating. Let's see the risk factors about Polyplex Corporation. So related to Polyplex Corporation, they have a debt of 1.5 billion Indian rupees as a long-term loan, and a long-term fund-based working capital facility of around 2 billion Indian rupee, and 2.02 billion rupee, and non-fund based around 0.30 billion rupee. So these are the debt they have, and they all have good rating for their debt, because it has been upgraded currently because of improved cash flows from the operation. So it has improved to INDAA stable for long term, and INDAA stable, INDA1 for short term. Uh, these are the ratings for all of their loans and credit facilities. And the company has a good credit position, because they executed the greenfield project in Indonesia, which was a capital expenditure for them, and the brownfield USA expansion, which is about to complete in 2022, is also credit neutral because of strong operational cash flow inflows. If you look at the long-term debt to equity ratios, company has actually reduced their debt drastically. In 2014 and so on, they had a long-term debt to equity of 0.64. From there, it has reduced to 0.14. Still, company has debt, but it's under control. And the interest coverage ratio also. See, in 2014, they had minus 1.16. That means that company had even trouble uh, covering the interest. From there, it had improved to 56.66 percentage, which is very positive for the company. Then let's see some business risk about Polyplex Corporation, what the business risk they can experience. The raw materials are mainly tied to the oil industry. How they how they mitigate that risk is they prices a product monthly or quarterly with negotiating with the customer. Then there is a foreign exchange risk, mainly for capital expansion, because they had subsidiaries, their own subsidiary in its own market. The company actually funds loans in respective countries' currency. So company mitigate that risk in that way. Then there is delays and cost overruns for new projects. The the company is credit neutral because of improved cash operational cash flows, and mostly the main project in Indonesia is almost complete. Only the brownfield project in US is about to take place, so it's also the company is able to handle. Then there is risk of regulatory hurdles or bans by government agencies because they are manufacturing plastic films. uh, the in mitigating this risk, company is a member of Plastic Body Association globally, and it is also very innovative in developing recyclable materials, reducing the plastic content. These are the ways in which a company is mitigating this risk. Then let's see the valuation factors. Over the years, the book value has actually jumped from 678 rupees per share to 1377 rupees very recently. But I think that 2021 it has slightly come down book value. I'm not sure, I had to look at. And price to book value is also stable. I mean, it never came to after one times. So it was around 0.6, 0.6, 0.6, 0.3, and in 2021 the price to book value came around 1.5. So that's the reason. That means that recently there has been so much investor attention in this firm, and the book value, both price to book value and have improved over the years, and the price to book value also increased slightly. So the stock is slightly expensive. You can't say actually it is expensive. Let's see some strength and weakness about Polyplex Corporation. In They are the established position in PET films globally. They had the fifth largest capacity, strategic location of plants and distribution facility, and then their diversified product portfolio. The mutual funds have increased their stake in the company. Net cash flow is improving from operation. Growth in net profit YoY. It's a company with low debt. Increase in revenue past 3 years, 3 quarters, and book value improve in last 3 years. Zero promoter pledge, and high TTM EPS growth, which is one of the reason why the share price is also appreciating. But when come to weakness, there is a slight decline in profit quarter on quarter. The mutual funds also decreased their shareholding in last quarter because the share price has been become little bit expensive. Let's see the peer comparison. If you make the peer comparison based upon P, see only Jindal Polyfilm, Uflux, and Cosmo Films have the near lesser or near P value when you compare with Polyplex Corporation. Others have higher P, EPL Limited, uh, Garware High Tech. Everything has higher P. And look at the market capitalization also. Market capitalization also, this comes second when you compare with EPL. Then it also good has good dividend yield. The quarter profitability percentage is also very high. And look at the ROCE, 26.79. Only Jintal has better ROCE than Polyplex Corporation. And look at the debt. If you look at the debt, it around most of the firms have debt, and nearly, and UFLOS has a debt of 3,616, which is very high. When they have market capitalization of only 3,751 crores. Oh my god. And when you compare with the peers itself, Polyplex is ideally placed for making an investment. Look at the price chart in 2002, and it was available at 8 rupees 53 Indian rupee. In 2020 also it was available at 300 rupees. Right now it stands look at this man, from 2021 around 2020 last, it had jumped enormously, like a almost double. You can't say even double. It's around 5 times jump was happening from the 2020 27 March dip. So from my insight to the investors, currently the market price is at 1,485 rupees. It has a not a very high PE value. It has a low PE value. Mistake from me. Sorry. It has a low PE at 9.15 when you compare with the industry PE of 17, and a price to book value 1.53. That is also kind of fair when you look at uh, the 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 amount of value in the company, and because of its performance and future projected earning, uh, the company is still at the fair value, but the stock is little bit expensive, which was happened within a year from 2021. One of the main reason why it became expensive is also the reason of COVID. Because of COVID, some films are there was a lot of demand for this kind of films for packaging, and everything became so sterile. So from my insight, it's a good company, competent management. It has vertical integration. It's a one of the low cost producer in the whole world, and it has a future prospect to grow within the PET films and their bread and butter model and the value products they made, and they can always go to new markets as well, which are the positive factors going on for Polyplex Corporation. So my suggestion is that any investors can buy this share for looking for long-term investment, but if they're looking for a short-term profit or even swing trading, it's not a ideal share because the share price is slightly expensive. The only main risk is if there are any regulations coming from the government in order to replace plastic, it might affect the industry. That's only the negative that I find about this firm. So guys, usual disclaimer, I'm not a licensed portfolio manager. You can read this disclaimer and make your own investment from your own understanding and make your own research. Give me all the feedbacks, and I respect your feedbacks as well. Thank you.